Continuing the series about which currencies are the best in the world, today we are going down under. This one is inspired by my Australian friend David Jiang, who was curious about how the Australian dollar is actually faring as an investment. G'day mates in Australia. I'm sorry if I'm scorching your accent, your beautiful Australian accent. Australia is known as this huge landmass with many resources that China is very keen into buying. It is also known for not having suffered a recession for the past 30 years, except if you count COVID. So considering all these economic strengths, is the Australian dollar a good investment? So I did the research for you and went back all the way to 1st of January 2000 to look at the historic performance of the Australian dollar to see if it's a good investment asset. And the comparison is made with the USD because it is the world reserve currency. US dollar or Australian dollar? Who is the winner of this boxing match? Let's find out. My name is Greg Jalbert. I'm a life and personal finance coach. I share what I know about personal finance and coaching on a cup of coffee so you can live a life of personal agency and build up your wealth. Due to inflation eroding the purchasing power of cash, it is usually not recommended to keep your money in cash in a bank account. Having said that, there are some short moments in time in history where it does make sense to keep cash in your bank. For instance, right now, the US stock market is down 20% since the beginning of the year. So this might just be the time. Let's imagine that on the 1st of January 2000, a fairy magically appeared and gave us 10,000 US dollars. The trick was that we would need to keep it for 22 years in cash. So we have the choice, we keep it in US dollar or we keep it in Australian dollar. And as a snapshot, you can look at the evolution of the Australian dollar versus the US dollar on this chart since 1st of January 2000. Interestingly, it's moved a lot, but it's roughly at the same point as it was 22 years ago. 10,000 US dollar in 2000 was converted to 15,239 Australian dollar. On January 1st, 2022, we converted back into US dollar to compare with the original investment of 10,000 US dollar, and we get 10,962 US dollar. So the AUD has a slight advantage compared to the US dollar. Additionally, over this period, the consumer price index, the CPI, which is a measure of inflation, rose by 78.9% in Australia. In the US, the CPI rose by 66.6% during the same period. Considering that the US and Australia are two rich countries, we can basically say that they consume the same type of goods, the same level of goods. So the 10,000 US dollar have devalued to a purchasing power of 6,400 US dollar today compared to 2000. The 15,239 Australian dollar have devalued to 8,518 Australian dollar, which translated into US dollar is $6,127. $6,100 versus $6,000, it's roughly a tie. Overall, round one is pretty much a tie. The fairy is capricious and changes its mind. She tells us that we now need to invest those 10,000 US dollar in sovereign bonds, whether from the US, from the Fed, or from Australia, from the Reserve Bank of Australia. Let's just follow the fairy. Here we're assuming that we're buying the bonds at the beginning of the year and selling them at the end of the year, so we're following the ride of the bonds over the past 22 years. And we're using 10-year sovereign bonds in terms of the ones that we're buying because of their stability over time. Our 10,000 US dollar would become 19,908 US dollar by January 1st, 2022, which is almost doubling our investment amount and is a 3.3% yearly increase over the period. If we look at our 15,239 Australian dollars, it would have become 37,294 dollars, which is a 145% increase of 4.4 nominal return per year. So we need to compare it to its dollar equivalent. So we use the exchange rate of January 1st, 2022, which is 1.3902 Australian dollar to the US dollar. We then get 26,826 US dollar, which compared to the 10,000 invested originally, gives us a 4.8% annual return over the period. Taking inflation into account, as per the cash calculation, the 19,908 US dollar effectively devalued to 11,952 US dollar if you had stayed with your money in the US. The 37,294 Australian dollar would have devalued to 20,845 Australian dollar, which is the equivalent of 14,994 US dollar. US dollar 15,000 versus US dollar 12,000 approximately, then we can say that the edge is for the Australian dollar. The winner of the round is clearly the Australian dollar. You like this video comparing the Australian dollar and the US dollar? Then you know what to do, and also do not forget to put the notifications on, subscribe to the channel if you want to have content like this every week. Also check out in the description other videos from other YouTubers who talk about the same topic and also talk about the Australian economy. You might find that interesting. The fairy is getting more adventurous now, and she's telling us that we need to invest those 10,000 US dollar in the stock market, whether in the US or Australia. And let's make it easy for ourselves, and we're going to take the main companies of the New York Stock Exchange on one side and the Australian Stock Exchange on the other side. The equivalence we can use is for the New York Stock Exchange, we will use the Dow Jones Industrial Average, which represents the top 30 companies in the US by market capitalization. And for Australia, we can use the ASX 20, which represents the top 20 companies in Australia. $10,000 invested on January 1st, 2000 in the Dow Jones Industrial Average and rebalanced continuously to follow it until January 1st, 2022 would have increased to $32,112, which is more than tripling and an annual return of 5.7%. Which is quite okay. Or $15,239 Australian dollar invested over the same period in the STI and rebalanced continuously would have increased to $31,289 Australian dollar, which is about double, or 3.5% annual return. Let us see how this compares in US dollar. We get $22,507 US dollar for $31,289 Australian dollar, which gives a net annual return of 3.9%. Based on $10,000 US dollar invested. 3.9%, 3.5%, yeah, almost the same. Taking inflation into account, as per the cash calculations, the $32,112 US dollar are effectively devalued to $21,697 US dollar if you had stayed with your money in the US. The $31,289 Australian dollar would have devalued to $17,489 Australian dollar, which is the equivalent of $12,580 US dollar. 12,580 versus 21,697 US dollar. There's a massive gap in performance, which most definitely go to the US dollar and investing in US stocks. The USD is the clear winner of this round. Let's look at the summary of our boxing match today. Round 1, staying in cash, is a tie. Round 2, investment with sovereign bonds of the respective countries goes to the Australian dollar. Round 3, investment in core companies of the US or Australia goes clearly to investment in the US. If you had planned to have money in sovereign bonds, in bonds in general, you would have gone for the Australian dollar, you would have done okay. But if you wanted to take a bit more risk and have a better return on investment, it was most definitely investment in the US stock market with US dollar, which was a better choice. Let me become a super forecaster for 1 minute, and just 1 minute. The future relies on two main things when we're talking about the Australian dollar and US dollar. It's the return on the bonds, the stocks on one side, and on the other side, the evolution of the exchange rate between the US dollar and the Australian dollar. The bonds for the US dollar and the Australian dollar have followed a similar trajectory in roughly the past 5 years. Though that might not be the case in the future. Australia is highly dependent on exporting resources, and the price of the resources are having a fairly big impact on its exchange rate, which might well mean that when prices are getting hotter for commodities, then we will see higher interest rates in Australia. Regarding stocks, well, the US stock market is a lot more diverse than the Australian stock market because there's just a lot more companies coming in and out of the main indexes in the US. Also, almost 50% of the Australian stock market main index, the ASX 20 or the ASX 200 for that matters, is represented by financial services and resources companies. So not very diverse. The added factor is the exchange rate, and that very much depends on what the Fed, the Federal Reserve in the US, does, and the Reserve Bank of Australia. The RBA has a primary mandate to contribute to the stability of the currency, full employment, and the economic prosperity and welfare of the Australian people. The problem here is that the Australian economy depends a lot on the resources that it exports and the evolution of the price of those resources. Interestingly, if you plot the price of iron ore with the exchange rate of the Australian dollar versus USD, you get a high correlation. And the biggest consumer of resources for about 30% of what Australia is exporting is China. So when China sneezes, Australia sneezes too. And it means that the exchange rate in Australia very much depends on the economic growth and the need for resources of China. If we look at the future, what is clear is that it's unlikely that the resource bonanza increase that we had in the 2000s because of China economic growth will happen again in the same way. Though there is India. The Fed has a mandate to keep inflation about 2%, which is also to support full employment in the US, which basically means supporting the economy. As I've said many times, the US has an unfair advantage in a way, which is to have the reserve currency of the world, which means that it can print a lot of money to support consumption in the country. But the party must end at some point. In the past 4 centuries, we've had 2 other reserve currencies, the Dutch guilder and the British pound. And we see where both currencies are today compared to their big highs in the past centuries. That means that the peak has probably already been reached for the US dollar, and the next 20, 30, 40 years are probably going to see the US dollar weakening progressively. So if you look at the strategy here, you might want to have bonds in Australian dollar, if you want, and stocks in the US dollar. If you're interested in more of those currency boxing matches, I've done one about the Indian rupee versus US dollar, the Singapore dollar versus US dollar, and the Swiss franc versus the US dollar. I hope that this comparison between the Australian dollar and the US dollar has proven useful for you today, and I look forward to seeing you next week for more personal finance and coaching on a cup of coffee.